We've talked a lot about the S&P 500 as the main index benchmark that you can invest in. But last year, I started talking about the QQQ or the NASDAQ 100. If you missed that video from a few months back, feel free to check that out later. But basically, the NASDAQ 100 is actually outperforming the S&P 500 based on a 5-year and 10-year benchmark. There's only one bank that's offering this as a UITF, and that is Security Bank. Unfortunately, the investment requirements are quite high. I mean, you'd have to open a US dollar savings account and maintain a $500 average daily balance. And on top of that, it's $1,000 that you would have to put in as your initial investment. So this got me thinking, are there investment funds out there that can be an alternative to the NASDAQ 100? I found 3 of them. So if you're curious to know about these and how they are performing, especially against Security Bank's technology feeder fund, this is what we'd look to cover in this video, so let's go. But before anything, if you are new to this channel, hi, I'm Mark. It's nice to meet you. In this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. So yes, we've covered a lot about the S&P 500. The S&P 500 cuts across an array of different industries, but for the NASDAQ 100, they are focused on the top technology companies. This means that the NASDAQ 100 is a bit of a higher risk. I mean, anytime that Silicon Valley gets hit, anything that happens in the tech sector, the NASDAQ 100 takes a hit. But of course, technology has always been leading the way in terms of development, and as companies, they have been milking it in terms of returns. So that's just a bit of a caveat before I start talking about the alternative to Security Bank's US Technology Equity Index Feeder Fund. Based on our comparisons today, we are only working with 12 months and 30 months or 2.5 years. I actually wanted to go a little further back. Unfortunately, this is the most equal comparison that I can make. I mean, our benchmark index here from Security Bank was actually just established in late 2022. So I couldn't really give you a 3-year look back at these. So bear with me as we are working with quite limited data. So let me now present to you the 3 global technology feeder funds that you can invest in. The first of these would be the Manulife Global Technology Equity Feeder Fund. The second would be the ATRAM Global Technology Feeder Fund. And lastly would be the BPI World Technology Feeder Fund. So those are the exact names if you wanted to Google them. So for the purpose of this video and not having to keep repeating myself, I am just going to be doing away with the formal names and just sticking to the company. So from this point onwards, I'll only be talking about Manulife, ATRAM, Security Bank, and BPI. So based on performance, let's cover the last 12 months. This first data would be covering the NAVPU, the net asset value per unit, of each investment fund, April 30, 2024 to April 30, 2025. Let's start with the worst performer to the best one. Based on these last 12 months, with a return of only 1.33%, we have Manulife to start us off. Following this would be returns of 4.28% coming from BPI. With the third on this list, just slightly higher than BPI at 4.43% would be ATRAM. And lastly, the best from this list would be from Security Bank. The returns of this fund in the last 12 months are at 11.09%. So far, we are seeing that our benchmark, the NASDAQ 100, being represented by Security Bank's UITF, is still the top of its class when comparing to other world technology, global technology feeder funds out there. So why am I comparing 12 and 30 months? Won't they always just be the same? You'd actually be surprised to know that the performance of these funds based on 12 and 13 months actually differ. So we have a different seeding for this second round. For the first on this list, covering the last 30 months or 2.5 years, we have Manulife still at the bottom of these performers. They have returns of 52.37%, actually not bad. This means that if you had put in 100,000 pesos in 2022, this would already be over 152,000 pesos in 2025. So since we are comparing this against the NASDAQ 100, we see that the returns are actually quite great, quite encouraging. Let's move on to the second on this list. With returns of 54.73%, we have ATRAM at 60.42%. You might be surprised to know that it's actually Security Bank. So even though the NASDAQ 100 represented by Security Bank is our benchmark for this world technology fund comparison that we're doing today, unfortunately for Security Bank, they actually dropped down the list to number 2. And at number 1, the last one remaining on the list, we have BPI at 63%. So let me summarize that again. In the last 12 months, we have Security Bank leading the pack, followed by Atram, third place is BPI, and in fourth place is Manulife. Moving on to our second criteria, based on the last 2.5 years or 30 months, in first place, we have the BPI World Technology Feeder Fund. This is followed by Security Bank's US Technology Equity Index Feeder Fund. Third on this list would be the Atram Global Technology Feeder Fund. And lastly would be Manulife's Global Technology Equity Feeder Fund. So I really wanted to make this video today for us to see that we actually have alternatives not only to the S&P 500, but the alternative to the S&P 500 and arguably the better performer is the NASDAQ 100 since the SEC, the local Philippine Securities and Exchange Commission, has been cracking down on these unregistered global apps. We only really have the banks, the UITFs, to be legitimately investing in. Legitimate may be a very divisive word, but I'm just sharing these with you as someone who's trying to be responsible on what I'm doing, what I am recommending. So it's only really these UITFs that I'm working with. By the way, there is also another global technology feeder fund out there from Sun Life. But from my understanding, and I could be wrong, its current availability would only be for those who have current policies or have existing investments in Sun Life. So it's more of a top-up rather than something that you can newly invest in. So I decided not to include it here. These are actually based from my initial findings and there might be more. If I've missed out on some of them, feel free to include them in the comment section. I would love to look into them and further compare them with this study in terms of accessibility, in terms of the minimum investments. That's actually one of the more important things that I guess I should cover. In terms of accessibility, it would be Atram since the minimum investment is only at 1,000 pesos. And yes, the good thing about that is you don't need to convert your pesos into dollars. So you won't have to look for a money exchange or open a new US dollar savings account as you would for Security Bank. So with Atram, you can actually invest in this via GCash. So that's very, very accessible. Look for it under your GCash app, go to GInvest, and go to GFunds. So amongst the four here, that would be the most accessible. The next in terms of accessibility would be Manulife. You might think that I'm not giving any love to Manulife in this video. It's actually not too far off from BPI, which is the best in terms of the 2.5-year return. Again, BPI at over 63% and Manulife at just under 53%. It's a difference of 10%, but if you have better access to Manulife, perhaps you are an existing client, I think not having to move your money or not having to start a new account might be convenient for you. And you know, all of these are looking at good returns anyway. Let's move on to the third in terms of accessibility. So we have here BPI. You only need $100 to start investing in the BPI World Technology Feeder Fund. To continue investing in it, they actually don't indicate a minimum, so I think that can be assumed as little as $1 or even less than $1. Of course, the downside to that would be having to open a US dollar savings account if you don't have a savings account yet with them. So that's always going to be a bit of the challenge. And again, you would have that minimum maintaining balance for your savings account that you would need to maintain and not touch. So that's always going to be the downside of investing in these funds via US dollars. Let's move on to the fourth. We already know this in terms of accessibility. Unfortunately, Security Bank is the least accessible. Again, you would have to open a US dollar savings account, a minimum of $500, and be able to invest in the Security Bank US Technology Equity Index Feeder Fund. You would have to invest another $1,000 to start that account. And each time, it's at $500 each time. So again, these three are your alternatives to the NASDAQ 100. Again, they are not exactly the QQQ, but since they are investing in technology funds that are invested in the top technology companies in the world, they are somewhat similar, and in some ways, they are better. I want to cover more of this in the future and see how these perform, especially since we are working with a very limited period for this set of data. So what do you think about these alternatives? Do you think that the technology sector might be in a bubble? How does this fall into your portfolio? Will you just stick with the S&P 500? Let me know in the comment section. If you like this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing.